Tuesday's corporate results from Microsoft and Alphabet will be significant determiners of the outlook for the tech sector in the next few months and the year ahead. In our video today, we show you why Microsoft revenue prediction is under threat and whether or not it is time to sell Microsoft stock. If you have been keenly following the news, you would have realized by now that PC shipments for Microsoft have declined about 19.5% in the third quarter this year. Data from the research firm Gartner have backed this percentage. Windows licenses form about 12% to 13% of Microsoft's revenue, and the PC downturn is expected to affect its sales by 100 basis points. Microsoft sales of essential products, including Windows and Office Suite, have also been tremendously affected. However, analysts believe one area is crucial for measuring Microsoft's performance next year. Let's find out in a bit what this is and whether or not investors should be bullish on Microsoft stocks. The strong dollar is also an added woe to Microsoft's already declining revenue. Undoubtedly, high inflation, global slowdown fears, etc., have affected consumer expenditure and businesses on items such as computers and laptops. The ripple effect. Key products like the Office Suite and Windows don't stand a chance. Climbing as far up as 17%, the mighty dollar has weighed on the earnings of companies with big global operations. Microsoft earns more than 50% of its revenue outside of the United States, and the exchange pressure makes it much more difficult for consumers and businesses overseas. The critical metric, perhaps also known as the major determiner of Microsoft's performance in the last quarter of the year in 2023, is the tech giant's cloud services. Microsoft's growing cloud unit is expected to offset revenue, which is set to grow 20% in the first quarter. The cloud segment comprises a range of products and services that can be used for networking, storage, mobile and web application, services, artificial intelligence, the Internet of Things, and a host of other computing needs. Software firms are the biggest customers of cloud platforms, and their business growth is eminent in the cloud service sector. Ultimately, Microsoft's cloud business is predicted to be worth $220 billion by FY 2027, although it will likely face competition from major rivals, including Amazon Web Services and Alphabet's Google Cloud. It is not all good news regarding the cloud sector boosting Microsoft's revenue in the coming year. There may be more to the story, and we will give you all the answers shortly. Make sure to share this video with friends and families that may need to hear what is happening with MSFT earnings. So, what do analysts have to say about the brouhaha of whether or not Microsoft's revenues are under threat? Guggenheim analysts said last week, all eyes will be on Microsoft's ability to maintain FY23 guidance for reported double-digit revenue growth, which we believe is at risk. After recently firing 1,000 employees, analysts fear more layoffs will come if revenue forecasts are not met. Analysts are skeptical that the tech giant can maintain its annual outlook and financial year 23 guidance for reported double-digit revenue growth. Analysts predict a further slowdown for the first quarter of 2023, beginning with a rapid deceleration, and this would be the smallest in several years. Although growth is expected due to Microsoft's cloud service segment, there is still not much to rejoice about. FY 2023 profit and revenue are expected to slow down due to foreign exchange issues and the drop-off in PC sales. JP Morgan noted that even with the crown jewel cloud business, signs of a slowdown have emerged. Microsoft expects revenue in the first quarter to grow 9.5%, generating approximately $49.61 billion, the first sub-10% increase since the third quarter of fiscal 2017. Earnings per share are also estimated at $2.30. 32 out of 35 analysts compiled by MarketBeat suggest a buy, with the remaining 3 suggesting a hold. With the probability of a recession and rising uncertainties, not much can be predicted with Microsoft stock. Considering the company's outstanding balance sheet that looks favorable long-term, it just might not be the time to sell. The stock market has had so much going on in the last couple of months. For more updates, subscribe to this channel as we bring you the latest news on stock. The tech giant, without a doubt, has an incredible ability to navigate treacherous waters and withstand the current economic pressures. So long as management knows what it is doing, MSFT shares could be well positioned for a better comeback after falling nearly 30% this year. For more on MSFT, why don't you check out our video titled Ultimate Reasons You Should Buy Microsoft Stock? What you need to know about MSFT earnings for more. We'll come your way again some other time. Thanks for watching.